Welcome back to Demystifying the Stock Market. You are now ready for lesson number 3. So in lesson number 1, we talked about asking yourself the why you want to learn how to trade in the stock market. Lesson number 2, we discussed market basics and market terminology. Lesson number 3, we are going to discuss the indexes and exchange traded funds. All right, let's get started. Again, continue to follow along in your workbook. All right, so first we're going to talk about the indexes. What are they? How do they work? What's in the indexes? And we're going to talk about ETFs, exchange traded funds. Now, the ETFs are something that you can trade as well, and there's a strategy behind that we'll briefly touch on. Now, again, there's a lot of information around indexes and ETFs. We can only cover a high-level approach today. So understanding and learning more about indexes and ETFs is something you'll want to continue doing as you further your stock market education. All right, what are the indexes? So the indexes are where a lot of the major stocks will trade. Again, it's different than the exchanges, but they are tied to the exchanges, if that makes sense. So the major indexes that you'll see as you look at different stocks is your Dow Jones Industrial Average, your NASDAQ Composite, your S&P 500, your S&P 100, and the Russell 2000. These are the top 5 that we're typically looking at all the time. So in the Dow Jones Industrial Average, you'll also hear it termed as the Dow 30. There's 30 stocks that make up the Dow Jones. And there's criteria for those stocks to be admitted onto the Dow Jones Industrial Average. It's usually size of the company, volume of trading, valuation of their balance sheet. So there's a lot of criteria that go into how a company actually ends up on the Dow Jones. And it's not uncommon occasionally for one stock to drop off if the company shrinks in size and another company to get moved on to the Dow Jones Industrial Average. Usually these are big blue chip companies, very stable ones that don't have a lot of momentum in their trading or in their movement every day. So a lot of the legacy companies are on the Dow Jones Industrial Average. You've got the NASDAQ Composite, S&P 500. So the S&P 500, you guessed it, is made up of 500 companies. That's why it's called the S&P 500. Then there's the S&P 100, and you guessed it as well. 100 companies are listed on the S&P 100. And then the Russell 2000 are your small and mid-cap companies, much smaller than companies that get listed on the Dow Jones, NASDAQ, S&P indexes. So Russell 2000 are what we call small and mid-cap size companies, and there's 2,000 of them that trade on the Russell 2000 index. So why it's important to understand the indexes is because the indexes are what drive the exchange-traded funds. So the exchange-traded funds, also known as ETFs. So here's 4. There's a lot more than 4 ETFs. There are tons and tons of ETFs out there. There's ETFs for sectors. There's an energy ETF. There's an oil ETF. There's a Bitcoin ETF. There are a lot of different ETFs for you to evaluate. One of the reasons that you may sometimes look at trading an ETF over an individual stock is that it can be a risk mitigation tool, especially in a choppy market or a market that cannot make up a direction or a market that is fighting between going bearish and going bullish. When you trade an ETF, you lower your exposure to one particular stock that may be having some type of volatility or some type of headline news that may impact the stock's movement. So a great example of this is, at the time of this recording, this is July of 2022. We're in a bear market, but the market as of late has been very choppy, very sideways, very low volume, not a lot. There's a lot of push-pull between the bulls and the bears. And so the setups for some of the individual stocks have not been as good as they have been before. And there's an increased risk with trying to trade an individual stock. However, knowing that the NASDAQ, continues to sell off, the QQQ is a great way to take advantage of trading the market through an ETF. So it allows you to capture a trade opportunity without actually trading an individual stock such as Apple or Microsoft or Meta or any of the others. So with the exchange traded funds, you have the DIA, which is the Dow Jones. So the DIA is a ETF that is tied directly to the Dow Jones Industrial Average. So what will happen is when you start doing your charting, you chart the DIA, the chart of the DIA will look exactly the same as the chart for the Dow Jones. The QQQ ETF, which I trade frequently, the QQQ ties directly to the NASDAQ. So when you start charting the NASDAQ and you chart the QQQ, those two charts, if you overlay them to each other, they will be identical because the QQQ ETF follows the NASDAQ. The SPY, another great ETF that you can trade. The SPY tied directly to the SPX index. And again, they are in lockstep. So when you chart the SPX index and then you chart the SPY ETF and you overlay those two charts, they will be identical. Those charts will look the same. The IWM, that is what trades against the Russell. So you can trade the IWM if you are interested in trading the Russell 2000 index. So this is an example of some of the exchange traded funds and how they work against the indexes. And again, there are hundreds of ETFs out there. Every sector has them, every industry has them. So there's lots of ETFs. So if you decide that you really want to trade the energy industry, for example, and you want to trade ETFs, then you would start looking at ETFs in the energy sector, the oil sector, all of that, and start making a watch list around that. So this snapshot here, what is in the Dow Jones Industrial Average? So pulled this snapshot for you. So the top 10 holdings, and again, there's more holdings than just 10, but the top 10 so that you can see what's in there. So as of July 2022, the top 10 holdings in the Dow Jones Industrial Average are United Healthcare Group. You see the ticker symbol, 3 letters. Goldman Sachs, 2 letters, even though it's traded on the New York Stock Exchange. Home Depot, Microsoft, Amgen, McDonald's Corporation, Caterpillar, Visa, Honeywell, Johnson & Johnson. So as of 5/31/2022, when this was published, these are the top 10 holdings in the Dow Jones Industrial Average. And again, a lot of it, this is driven by size of the company. That has a lot to do with who gets placed onto the Dow Jones. Again, also the term for that is market cap. Okay. So this was a very short lesson. Enjoy it. So again, we covered understanding the indexes. So we talked about the Dow Jones Industrial Average. We talked about the NASDAQ. We talked about the S&P 500. We talked about the S&P 100. And we talked about the Russell 2000 small and mid-sized cap companies. Then we also covered at a high level exchange traded funds, what they are, how they trade against their counterpart indexes, and the opportunity for you to develop an ETF watch list as a potential trading tool, depending on the situation and what's going on in the market. So that wraps up lesson 3. We'll see you back here for lesson 4 shortly.